I'm Steve Morgan, founder of Cybersecurity Ventures and host of Evolution Equity TV. I'm here today with Richard Seewald, founder and managing partner at Evolution Equity Partners, an international venture capital investor partnering with exceptional entrepreneurs to develop market-leading cybersecurity and enterprise software companies. To learn more about our sponsor, Evolution Equity Partners, visit evolutionequity.com. Richard, welcome. Great to have you with us today.
Hey, Steve. Great to be here.
So I don't know anyone who can give us better perspective and context on the cybersecurity market, and this is a point in time where we really need it. Let's start off by just looking back on 2021. It was a record year for VC investments in the cybersecurity space. We tracked deal flow about $23 billion. We've read media reports that put that anywhere from 25 to 30 billion. So hard to get our arms around every single deal globally. This year, we're running at about the same rate. So first half of 2022, very similar to what we saw in 2021. So numbers don't always tell the story. What are your top level observations, Richard?
Well, look, I think we started off the year, the first quarter, more or less continuation of 2021. So the first quarter 2022, you saw some pretty large deals, the Google acquisition, several large funding rounds, a number of deals that got done that allowed us to look at first quarter this year on year, more or less on target in terms of what happened last year, mergers and acquisitions and funding. As we moved into the second quarter, we continue to see deals that were priced perhaps in Q4 and Q1 that continue to get done, as well as the beginnings of, let's say, an accelerated consolidation track that you might see go into Q3 and Q4 with companies that may have been looking at rounds of funding, may have been looking for strategic partnership, where all of a sudden the valuation perspective has changed. And that's perhaps what we'll see in the second half of the year, where consolidation will continue along the lines of what we saw in Q2, as well funding.
So, a lot of the input we have and a lot of the processing comes around what we read in the media. And, I was talking to a Fortune 500 CISO about 2 weeks ago, and his budget has increased substantially. But he said to me, Steve, what's going on in the market right now? I'm reading a lot of stories. I'm hearing about layoffs. We're not seeing the same, level of funding. And there are some stories in the media, but, we go back through, Richard, starting in January, we saw 1Password raise $620 million. Your firm participated in an investment into Pantera. I believe that was around $150 million in total funding. There was a $100 million deal to support Beyond Identity. Your firm led that round. We've seen a number of other companies. Just last week, Coalition raised $250 million. And when you go down the list, and I was talking to the CISO about Immuta, Vanta, Perimeter 81, Devo, Semperis, Pathlock, Abnormal Security, Tailscale. I'll stop there because there's another dozen or so. All of these companies raised in excess of $100 million. He was so surprised to hear that.
Steve, I think what you're going to see in the months going forward are equal size $100 million plus deals in best of breed cybersecurity companies that continue to grow in the current environment. So take a look at how the public markets have behaved over the first half. By and large, cybersecurity in the public market, companies have continued to grow, continue to benefit from the tailwinds that we're seeing in the market. So increased cyber attacks and fraud, attention to compliance, regulation, a host of other areas that are driving chief security officers' wallets towards best-of-breed cybersecurity companies. What has happened in the first half, though, is certainly a compression in valuations in the public markets. Now, some of that has begun to seep into sort of the Series A, B, and C segments, but I'd say there's probably still more impact to be done. But just going back to your point, best-of-breed cybersecurity companies still in the private markets are benefiting from those tailwinds of growth, and you're going to see deals continue to get done across the spectrum of Q3 and Q4, and I expect beyond that.
So I do want to get your feedback on one dynamic, and that's layoffs. I would not call it widespread. I do not view it that way at all. However, there have been, I'd say, a good half dozen companies who have raised in excess of $100 million over the past 18 months who have announced layoffs, and they've been in the 10 to 15% range. How do you look at that as an investor? What do you make of that? Are those just, kind of one-off companies where maybe they hired up very aggressively and now they're backing down, or is it a trend that might be developing?
A little of all of what you said. I think, you know, companies are sitting back today and looking forward and trying to call where the we are in terms of the economic cycle. And any prudent investor, board member, CEO will sit back and address, the total cost that they may be running on a monthly, yearly basis to run the business vis-a-vis where growth is in the market. And notwithstanding that attractive growth, companies are now deciding to reduce some of their costs by those layoffs. And I think you'll continue to see that. We're at a certain point in the cycle where, notwithstanding all of those positive indicators, we have to look beyond this year and into next year. And I think companies are taking that opportunity to install some downside protection into the model. Companies have been reducing staff through and throughout the cycle on a regular basis. I think today it receives more attention because of where we are in the cycle, because of the sizing of the funding rounds. But reducing staff and then scaling up and scaling down are all part of the cycle of growth of any cybersecurity company.
So, Richard, I've been asking around, talking to people about some companies in particular, Lacework, Cyberease, Deep Instinct, OneTrust, IronNet, just to name a few. And what I'm hearing is that these companies are laying off, but it's primarily around sales. And I think that's a good thing, because when you start cutting into your engineering teams and, some of the fundamental positions responsible for bringing these products to market, that's where you really have some worry. So despite the fact that we've even seen some of these companies announce 10 to 15% layoffs, it's still looking like that's primarily in the area of sales.
Absolutely. I think when you look at growth today, it's growth not at all costs, but ROI generated growth. And the focus around ROI is driving some of those reductions where, on the margin, perhaps sales assets might not be needed to hit target in the current year. And, that might be ramped up in 2023. But I think carefully, boards, CEOs, investors are looking at that ROI-driven growth dynamic and implementing that into the business plans of companies that they're invested in.
So I want to ask you about Evolution Equity Partners, and I don't know how you do it, Richard, or I guess it's a combination of you and your team, but you have picked some of the hottest companies in the space, and this is continual. I mean, we've been following you for, the past 3-4 years, looking at just a couple of companies who we met up with at RSA conference with you, Security Scorecard and Pantera, two of the hottest companies in the cybersecurity market. Tell us a little bit about them, what they're doing this year, and then any other companies you'd like to touch on.
Well, look, both Security Scorecard and Pantera address an area around the language of security risk. And the language of security risk has become an integral part of how chief security officers communicate with their boards of directors, how boards of directors understand probably the most consequential risk factor in any organization today, as well as how insurers and reinsurers understand cybersecurity risk. So, Security Scorecard does it from a security risk rating perspective. They're rating close to 20 million companies worldwide, providing a letter grade to each individual company, addressing cyber risk up and down the security stack, providing chief security officers a quantitative way to convey cyber risk to a boards of directors. And likewise, a boards of directors that now can sit with a letter grade that provides an indicator on perhaps the return on investment in cybersecurity products that they've bought over the last year or so, and that provides an extremely valuable tool. So, Security Scorecard is positioned extremely well in the current environment. Likewise, Pantera, an automated pen testing platform, looks at the pen testing space, provides 24/7, 365 days a year, an opportunity for chief security officers to gain visibility on their cyber posture through an automated pen testing tool. So the whole red team segment has grown tremendously. And that comes as a result of demand of chief security officers and boards to understand cyber posture systematically and do that on a regular basis. So it's no longer once a year where you have your audited pen tests. That 365-day year approach now allows chief security officers to understand cyber posture far more effectively.
So I want to ask you about one other company who sits in an enormous market. We have been tracking the security awareness training market now for the past decade. We've sized the market. It's one of the fastest growing. There's a very hot company, Cybesafe. You recently invested. Tell us a little bit about them. When we were together with you, we met up with them at RSA as well.
Yeah, tremendous team, tremendous technology and platform based out of the UK. Looking at the cyber training space, absolutely right. But then also looking at the analytics and the human factor of cyber risk within an organization. I think when you combine the two, the training aspect, the data analytics, understanding the human factor in cyber, and looking at that from an organizational perspective, just allows more visibility for chief security officers. It gives more visibility on the attack surface that's out there and truly quantifies the cyber risk that exists with regard to the human factor. So we're very pleased with that company, that team. Oz does a tremendous job in terms of positioning that company, given his background in the military and then in cybersecurity. He's built a tremendous team that is really taking on that space, and they're positioned front row and center to kind of win in that human factor driven cybersecurity segment.
So, Richard, I am curious before we, move on and ask you about mergers and acquisitions. So, a company like Cybesafe, how did they get on your radar screen? How do you find out about a company like that? Because they, arguably are a bit player, but growing, and they've got a great story and tremendous, upside. How did you find out about them?
Yeah, so Evolution Equity Partners does systematic analysis of investment themes in the cybersecurity space and adjacent categories, including blockchain security, quantum, a host of other areas that now consist of that umbrella that we call technology safeguarding our digital world. And one of the areas that we did a lot of work on was that human factor aspect of cyber. We did our top down, bottom up analysis in that segment, looked at the top 5 companies in the segment, and then dove down deeper into each company, management team, approach, product roadmap, and assessed what we thought was a next generation player that would change the game and that would drive significant values for organizations and government around the world.
Well, that's great to hear. And Oz, as you said, is incredible. We had a chance to talk with him. So that's definitely a company to watch. So, Richard, let's touch on mergers and acquisitions. A lot of companies are in play right now. There's been steady deal flow. But I want to ask you about the biggies. It started early this year. Google announced they were acquiring Simplify for $500 million. And then they topped that by announcing their acquisition of Mandiant. I believe that was about $5.5 billion. So the biggest deal we've seen in the past couple of years. So give our listeners a handle on M&A activity trends you're seeing now and what you're expecting as we finish out the year, head into 2023.
I think you're going to continue to see consolidation in this space, both large deals, smaller deals, and even micro deals of companies that, might get cycled out of this part of the economic environment. But you're going to see some large consequential deals get done by the consolidators in this market, both public and private. And whether we get to the numbers of last year, let's see in terms of deal sizes, but I think you're going to see a pretty healthy year for mergers and acquisitions in the cybersecurity space.
So, Richard, we put out a report a few months ago. It was sponsored by Evolution Equity Partners, and we appreciate your support. We get great feedback from you, and you're able to offer some great insight. We estimated that $30 billion 2025, looking out 4 years from now, will be the total damages, and that's based on 15% year-over-year growth starting in 2021. And at that time, we were looking at about $17.5 billion in damages. A few years ago, I don't think we could have imagined that type of damage, but I don't know that we could have imagined the size of the market, as you pointed out. So the market grows, and we're seeing a lot of next generation technology, perhaps cyber teams that aren't equipped to completely defend that yet. They're learning as they go, but I'd like some feedback from you. Just, what are you seeing in the way of crypto crime?
Sure, Steve. So look, over the last couple of months, and I'll use the examples of the cross-chain hacks that have happened on a number of the bridges out there where cyber hygiene was not attended to. And a lot of this include the basics of cyber hygiene, that being cryptographic keys left in chat rooms, credentials not protected well. Basic cyber hygiene on the blockchain has been left to be much desired. And I think work there in terms of security companies that address blockchain security over the next couple of years is going to be a tremendous opportunity for investors and entrepreneurs. We look at a lot of the lessons learned in the Web 2.0 world in terms of how to build a cybersecurity company to defend and protect against the most consequential hacks, using that know-how and applying it to the blockchain, where we're in sort of the time period of initial phases of development of the security space on the blockchain, using those lessons learned to build platforms on the blockchain to enable cyber security and security hygiene and a host of other areas on the detection and response side will be a tremendous opportunity. And, the hacks that you've seen over the last couple of months are indicative of the need, the demand for those robust security products that will defend, protect against a host of cyber attacks and fraud on the blockchain.
So, Richard, I'm glad you brought that up because those attacks on bridges are very serious, and I'm going to ask you about a couple of companies who you've invested into who are doing a great job in the market. But I want to also ask you about rug pulls, and I think the concern there isn't so much the total damage because it's not nearly what we're seeing around bridges, but at the same time, there's a branding issue. I think it can scare people off. It can confuse people. We're still seeing those rug pulls. What's your perspective on that? Are we going to continue to see it, or are we seeing enough response from law enforcement? There have been some scammers, if you will, who are serving serious prison sentences right now.
The rug pull phenomena in terms of fraud being perpetrated on consumers and businesses on the blockchain is a serious area. But I think going back to the cyber hygiene and sort of foundational security on the blockchain will enable counterparties to better assess the risk that results in a rug pull. And again, it goes back to the fundamentals of security that was built in Web 2.0. Some of those hygiene factors are still relevant and there are still weaknesses there, but there are significantly and multiple times more vulnerabilities that result on the blockchain, that result in rug pulls, result in hacks and fraud because of the awareness of counterparty risk and cyber hygiene on the blockchain. So it's a big opportunity. Evolution Equity Partners will be investing in that segment in companies that address that square on.
Richard, someone asked me a question. This was back in February, and I really couldn't answer it. I don't know that I could answer the question now. I don't know if you'd be able to answer it, but this was on the heels of the $30 million theft from Crypto.com. And of course, they're a high profile company in this space. And the question was, are these exchanges any more or less secure than corporate networks and what we typically think about when it comes to cybersecurity? And are they going to become more secure?
I think they're going to become more secure as you see regulators compliance focus on blockchain transactions. You're going to see technology solutions in place that reflect what we see in the environment today off the blockchain. So in sort of the traditional finance world, where you see technology that has been built to address transactions, that address fundamental security related to those transactions. There's some great companies out there that are addressing that space. And again, the regulators and compliance will jump in to effectuate this, in particular because larger institutions now have begun supporting platforms where cryptocurrency and blockchain transactions are being effectuated. So look for more of that. A number of our portfolio companies address that space, and they're gaining significant traction in the current market.
So, Richard, would that be true of consumers and crypto wallet technology? Are you seeing, that becoming more secure? Do you think that, user confidence is going to grow as time goes on?
Well, again, I think being able to monitor counterparty risk on the blockchain will enable, a lot of consumers as well as businesses to better quantify that. And we've invested in some companies that address that segment. There always will be vulnerabilities, just like there are vulnerabilities today in the Web 2.0 world. But we strive to invest in companies that will lower the risk and make that risk palatable for consumers and businesses to be able to continue to transact on the blockchain.
So tell us about a couple of companies. We're very familiar with Solidus Labs and Elliptic. These are two, great companies, both of them very well positioned in the market. To give us a sense of the types of companies you're investing in.
Sure. So, right on point, because Solidus Labs is a monitoring and surveillance platform that looks at transactions on the blockchain and enables a user of the technology to identify manipulations in pricing, spoofs, hacks, a host of other areas where hackers and criminals try to engage themselves within a transaction and cause harm or manipulate a transaction to gain economic benefit. So Solidus Labs has become foundational now in terms of the infrastructure for the blockchain and for transactions to be enacted. The company, based out of New York City with an engineering base in Tel Aviv, has now begun working with top tier organizations around the world who have enabled their clients to transact on the blockchain, whether that be cryptocurrency, NFTs, or other mechanisms that enable commerce on the blockchain. Solidus Labs is positioned uniquely to provide that foundational security for organizations.
Richard, great to have you on with us. We look forward to catching up next quarter to talk about VC trends and crypto crime as well.
Great to be here and really enjoyed the conversation. It's going to be an exciting year in terms of both cybersecurity and security on the blockchain, and I look forward to the next discussion.
I'm Steve Morgan, founder of Cybersecurity Ventures and host of Evolution Equity TV. You can watch all of our episodes at evolutionequity.tv. Evolution Equity TV is brought to you by Evolution Equity Partners, an international venture capital investor partnering with exceptional entrepreneurs to develop market-leading cybersecurity and enterprise software companies. Visit evolutionequity.com to learn more. You can watch all of our episodes at evolutionequity.tv.